Hey, Fidelity Fortune Hunters, Tom Wilmot. Usually we're talking about the Forex, but we've done several videos on the Fidelity Active Trader Pro website and platform, the software platform they use that gives you some charting abilities and as well as access to their excellence in execution. Many of you have IRAs with Fidelity. And it's especially during the pandemic been an opportunity to do some trading in the markets and learn about that. And these videos that I put together are to try to help you understand a couple of things. Number one, how to use the platform, because there's not much educational material about that provided by the company. Where some of the shortcomings of the platform are, and they're not your fault. They just don't have features that exist in other platforms. And then finally, I wanted to show you a little bit about how I have translated my indicators and templates from the Forex market and particularly Metatrader over into the Active Trader Pro environment so that I could do some managing of my IRA as well. So hold on to your hat. We're going to give you some more tips and tricks in just a minute. Okay, fortune hunting friends, let's just quickly go over some of the tips and tricks right away so that you can not be going crazy when you're testing out this platform. First of all, if your margins on your chart aren't right, if you move your cursor, you'll see that there's a double arrow that comes up when you left click. You can bring your chart down or you can move it up, and likewise over here in the right hand margin there's the line there. You can left click and move things around, so if you are jammed up close there, that's helpful. There are ways to make this bigger or smaller, and in particular if you do this up arrow right here and click on it, you can see that you can grab this and you can move it around and make it bigger or smaller. That's a little easier to do than it is to fuss around with the numbers and dates and so forth and frequencies down here. Now I have this set to if we down this arrow, we'll get rid of that for the time being. I have this set to a 195-minute chart. That means that as opposed to a daily chart, I'm doing 2 candlesticks per trading session, and if you come and click here, you can see you can adjust this any way you'd like, 30 minutes, 60 minutes, and so forth. And several of these strategies, of course, and my moving averages, my multiple moving averages work fine in the lower time frames, but I'm just assuming for purposes of these videos that a lot of you are doing swing trades and not, sitting at your computer 93 hours a day. In any event, we have on this particular chart, just to share with you what's going on here, multiple moving averages, and I use EMAs. I use the 12 EMA, which is right here, the 16, the 20, and the 24, and basically what happens here, and then it's bounded by an EMA 28, I guess I added to this particular chart, but in any event, you get the idea. And one of the things that I'm very careful to watch out for is not taking trades that are what are called counter trend trades. Right here we see that the moving averages have crossed over and are pointing higher. This is an indication that the short-term traders are leading the charge, but the long-term acquisition buyers are acquiring stock at this point in time. This happens to be the Qs, which are a representation of the NASDAQ and ETF for that. But in any event, you can see here clearly that what a counter trend trade is would be trying to say, okay, it looks like we're getting out of control here, let's short this. Well, when the moving averages are headed higher, you want to be very careful, because that's going to be probably a limited opportunity trade, as opposed to kind of an unbounded opportunity, which is if the moving averages are headed higher and you have a pullback in what I call the bands. That's divergence, which suggests that we're going to maybe have a rebound. And you can see, and we've said this in other videos, so I'm not just trying to be smarter than myself today. I've been doing this now with Fidelity for over a year, and you can see that going all the way back to the March pandemic drop-off, since we had the turnaround and the reversal higher, we've had pullbacks into the bands and then reversals higher. And every time with the Qs, especially with the NASDAQ tech stocks, we've been reaching new highs. Now, the situation is that you could, in fact, move to a larger time frame as well to see what's going on here. You can go to a daily chart, or let's go try for a weekly chart. And you can see here was the pandemic. This backs us all the way up to January, the back off we had in January in the fourth quarter of 2018. And in each case, you can see here, even on a weekly chart, that this compression of the bands is a telltale signal. It compresses and it really squeezes. It squeezes the longs, but it never breaks. And then we have this fiery move to the upside both times, in particular with this one. Now, as long as we're here, let's go to the daily chart. We'll come to this one. And we'll find out here, once again, on the daily chart, it was a little easier to see on the 195 minute. We didn't drop back as far each time as we've moved through since the April turnaround into May, June, and now July with the most recent high. Let's move this over a little bit so you can see. But bottom line is, the moving averages have been very, very helpful in determining what's happening. Now, when you first get your kickback up here, you want to be a little careful. Now notice we had the original drop. We also had this then pullback. And that's when we had the really precipitous drop in the market here. So always are looking, whether it's upside or downside, looking for that pullback into the bands. Now, another indicator I use is the oscillator RSI. Notice here, I've got a 45-55 band associated with this, and when you go to a particular one of this, you find it, you left click here, and you can see you can modify it. And here I have put a 55 level overbought and a 45 level oversold with my green lines. So then you click apply and so forth. And notice here that when we pull back into the bands, we really are respecting that 45-55 range. We have to wait for the pullbacks here in order to get the optimum trade location. Same thing over here. Notice here we pulled back into this area and this one. Now, today I wanted to add one more for you as an indication, an indicator that a lot of people know about, and it's often maligned, but in this case it's been pretty helpful also. We're going to go to stochastic slow, and that adds here the stochastic slow. Now, when you first get it, it comes up with a default value of 14 and 3. I'm going to click here again, left click. I'm going to try to modify. And I'm going to change this to a 7. I'm going to just make it a little smaller. I'm going to make the smoothing a 2. And I'm going to apply that now. And so now what I'd like to show you is that on the daily chart, this is a little different. But I want to also show you that sometimes you don't even have to have the 2. One is the smooth moving average and the longer term kind of tracker. The red in this case is the stochastic itself. Now I'd like to go back to the 195 minute chart. I'm going to apply that. And you can see here very clearly that, and even if we, let's go, I'll make it a little bigger too. I'm sorry for this to delay, but let's just make it this, let's show you a little bit more clearly what's going on. We have too many candles here. Let's make it bigger. Okay. Now we can see a little more clearly here what's going on. Notice that as we pull back into the bands, we have ourselves coming down here. Now the stochastic is usually 20 and 80 or 25 and 75. Notice we have the significant drop, although we are very well protected by our upside bands. Notice here we held at the 45-55, and notice that when we had the crossover here, that's when it was safe to get back into the water. So that crossover of the stochastic and the tracking line is a helpful indicator as well. This one was a little bit of a false break because we came back up and then we fell off again, but still in all, depending upon where you put your stops, you can be pretty much clear in terms of where you're going to want to get your primary entries. Okay, now the other thing you could quickly do if you don't want to watch the crossover, watch this, modify. And the other thing you can do is you can simply get rid of the color here, make it black, apply, and now we just have the tracking line, and you can see that's a little easier to interpret. When that's down and oversold, that's a place where you want to begin to consider the upside move. Same thing here. And notice also as you're getting up into this area, overbought is clearly a warning sign. But the difference with the stochastic is that with the bands, you're able to use the one that's more relevant. These, you can't really tell when the turnover is going to occur. Here you know you're in the bands. If you have a reversal, it may be a great time to get in for that particular trade. Okay, let's take a quick look at two other charts. I wanted to show you the Amazon now too, because it has also used this very helpfully. Notice the pullbacks here. This is our 195-minute chart. Pull back into the bands. If you're using a shorter, say, weekly options strategy, you might want to take this down to a 60-minute chart or perhaps 90 minutes or something of that sort. Make it a little faster moving and so forth than the clear swing trade. But look at this move, the last move we just had, where we went through the roof on Amazon and took ourselves to new highs. Here we go. Let me drop this down and show you. Pull this over. We have this pullback into the bands, and once again, it's not very big. So let's try to fatten it up here a little bit so you can see it clearly. All right. And if you want, at some point, you can save your template, by the way, and then in order to see this more clearly, you could get rid of some of these. If you want to simply delete this to give yourself more room on the chart. And then you can take this one here, get your double arrow right here. Come on, baby, where's my mouse? And bring this down. This gives you a clearer picture of how you're working with this. Now, pull back into the bands. Down here we go, and so forth. All right. Now we've got a very clear picture of how this divergence and compression is working. Compression down here, and then off to the sky. Okay? So one last thing I'd like to share with you is also, let's go back to the Qs for a minute and show you something because you want to know when maybe you're going to be topping out as well. And what I'd like to do now is move to this 180. Let's take a daily chart. And in fact, we'll move this over here. And so you can see it absolutely clearly. I'm going to squeeze this way down so it's almost invisible. Now what we have is a chart that shows pretty clearly what's been happening since the pandemic attack of the markets back in February, March. And what you can do here with your drawing tools is come here, and here are your Fibonacci retracements. Click on this. If we come here, you can see we click on it, we drop it down to this area, and here we are in this particular space. I hate this that you can't change the default color. It drives me nuts. I have to do this every time. I get rid of the 23. I don't like that. I add a value, and I'm going to add 127. A couple of the famous Fibonacci values, 127 and also 1618 is the golden value, as they say. We're going to apply this on the upside of, I did it wrong apparently. I'm going to go 127 and you have to add value. And please notice that here we are. We're approaching this level here on the Qs. We've gone through it. You would have to add a 1618 in order to get the next Fibonacci level. So the question would be at this point, are you happy to be buying? I think it's a little stretched. You could conceivably pull back into the bands surely without even getting rid of your 127. So as things go, even if you chop along here for a while, your bands will catch up with you. But once again, this is a thing you can add to your charts. If we go here, let's take a look and let's add a value 1, 6. And let's make it a 162 for the 1618. We're going to add the value. We're going to apply it. And what we'll do here is pull this down. Let's see where we are. Where's my value gone? If we come down to this, and you can see now that the eventual target here on the Qs would be way the heck up at the 280 level on the 1618 extension. So those are a few tips and tricks for your Fidelity Active Trader Pro portfolio. Please subscribe to our channel if you like the videos. We'll try to do more as we move along here through the pandemic. I wish you the best with your trading. Please check all of the links that are available to you down in the description below the video. There's some free indicators for Metatrader if you'd like to check out the Forex market. I think it's also very great way to make money. So keep me posted with any questions and comments. And once again, thanks for subscribing. We're blasting past 500 subscribers and really appreciate the interest. So trade safe, be safe, stay healthy. Don't take those counter trend trades. Manage your risk, set your stop loss, and good luck. See you next time.